Welcome back to Metals, Money, and Markets, week ending July 21st, 2017. With me, as always, is Mickey Fulp, the Mercenary Geologist, and from miningclips.com, I am Rob Goodman. Well, Mickey, I think the story of the week is the pressure on the dollar, a Yellen message of a low interest rate environment. Let's get right into it here. Spelled pretty decent week for the metals, with silver being the big winner here.
Well, the story, as you said, was the weak U.S. dollar basically in free fall. That led the precious metals to reach four-week highs. Gold, silver, and platinum up 5 over the last 6 days. Gold finished at 1254, up over 2%. Silver 1650, 3.5% up. Platinum only up 1.5%, closed at 934. And of course, palladium, which is the contrarian, I don't even know if it's a precious metal anymore, certainly does not behave as the others. It's been down over 5 of the last 6 days. It finished at 841, down 1.5%.
And buttoning up with copper, the same gain as the week prior.
Yeah, very bullish and very strong contango now. Finished at a 4.5-month high at 271 for 1.5% gain, driven really by, once again, the weak dollar and very strong demand, looks like, from China going forward.
Shifting gears into energy, nothing going down with uranium, but certainly oil under some pressure again.
Yeah, uranium flat once again, but oil down over 2%, finished at 45.60. Most of this fall occurred on Friday, but it's become evident that the OPEC compliance with production cuts is starting to break down, except for the Saudis. And it looks like the Saudis, for strong reasons economically, will continue to cut. They're talking about another 600,000 barrels, perhaps 1 million barrels. But the real deal here is U.S. shale production just keeps climbing, Rob. Week after week after week, they're projecting that July figures will come out in over 100,000 barrels a day more than June. Rigs are flat for the second week in a row, so maybe this is slowing down a bit. But it's all about U.S. shale once again.
Moving over to the currency markets, as mentioned at the top, all the pressure on the dollar, and as expected, euro and loonie rallied up nice against it.
Yeah, the U.S. dollar continuing its fall. It's almost red on the board for the last 2 or 3 months. Down less than 94. That's an 11th month low. The euro hit a 2-year high, basically driven by Draghi, indicating that the European Union was going to continue to buy its own bonds through at least December. And the weakness in the dollar also drove the loonie to a 14-month high. It finished at just under 80 cents. I should say dollar 93.97, euro 117, and the loonie 0.7975 for the week.
And finishing up with the markets, across the board pretty good, but Dow gave back a little.
Yeah, the markets were all off on Friday, but bear in mind we hit all-time highs on the Dow on Wednesday, S&P 500, 2 days of all-time highs this week, and the NASDAQ, 3 days of all-time highs. So let's look at the numbers. Dow at 21,580, lost 58 points on the week. S&P 500 2473, up 0.5%. Nasdaq 6388, up 1.2% for the week.
Finishing up with the venture, up a little spot here, 3 points.
Yeah, it's basically treading water. We should note that we are in the middle of the summer doldrums, very low volumes. In the U.S. markets, too, not only the Toronto Venture Exchange, but on Friday, the volume on the Toronto Venture Exchange was only 34 million shares. That's the lowest volume since the end of March of 2016. No end in sight except for way out the end of the summer on Labor Day, and we got lots of summer fun before that happens.
Well, I sure hope so, and we'll keep our eye on the data and look forward to catching up with you next week. Appreciate the time, Mickey.
All right, thanks a lot, Rob.